Okay, in this video, I will go through the solution for E4-7. So if you have not gone through and practiced this on your own, please stop the video and do that. It's important for you to practice on your own. Sometimes it seems like you understand when you're just walking through them with me, but actually trying to do it on your own really shows you whether you have that understanding or not. So try it on your own. Once you've done that, go ahead and go through this video. Okay, E4-7 says that Lipsky Insurance Agency reported the following items at May 31st. Again, it lists a variety of accounts and gives their balances. And it doesn't tell us, so we're assuming these are all their normal balances. Required number 1 says make Lipsky Insurance Agency's closing entries as needed for these accounts and include explanations. Okay, so part 1 is doing the closing entries. We know we always have the 4 entries as long as we have the needed accounts, but we go through them step by step. So closing entry number 1, we're closing our revenues. Number 2, close your expenses, and we're closing both revenues and expenses to the income summary. Closing entry 3, we close the income summary to capital, and closing entry number 4, we close any withdrawals to the capital account. Okay, so the first entry here, got May 31st, we need to close our revenues. The normal balance of a revenue is a credit, so we will debit each of our revenue accounts. If we look through, the only revenue account that we have is service revenue, so we debit that. And that was for $4,200. We debit $4,200 and we'll credit our income summary account. $4,200. And we just say to close revenue accounts. Okay, so that's closing entry number 1. Closing entry number 2 is to close all of our expense accounts. And we're closing those to the income summary. So I always just start with my debit to the income summary. I don't know the amount yet because we need to figure out our total expenses, but I start with that and then fill in the amount later. And again, you could put your debits at the end, that's fine. I always just get used to debits first. So now we walk through the list and we need to close each of our expense accounts. So the first one we see there is insurance expense. And we know expenses normally have a debit balance, that's why we're crediting them, because we want to close them to 0. So credit insurance expense, 100. The next one we see is marketing expense. We'll credit that. And it was for $1,600. The next expense is amortization expense. Credit that for $700. And finally, the last one that we see there is our rent expense. So we credit that as well. And it was for $400. Okay, so we've got all our expenses. Now we need to debit the income summary. So we're just adding these expenses up. If we add them all up, we get to $2,800. So that is the amount that we will debit in our income summary to close expense accounts. Okay, now closing entry number 3, we need to close the income summary account to capital. Oops, sorry. So here, again, you don't have to do a little T account, but I think it just shows it well. You can just do the math that you see here, but We'll walk through this quickly. So in entry number 1, we credited the income summary, and then in number 2, we debited it. So after those 2 entries, we are left with a balance of $1,400 in our income summary and a credit balance. Because our revenues were more than expenses, we know that is our net income. So entry number 3 is now to close that. So May 31st, we're now debiting income summary because we want to get it to 0. So we're closing it. We do the opposite. We had a credit of $1,400, so we will debit for that same $1,400. And we're closing this to the capital account, which we can see in our list was C. Lipsky Capital for $1,400 to close income summary. And our closing entry, the 4th one that we do, is to close our withdrawals account. And in this case, we do see C. Lipsky withdrawals here. So we do need this 4th entry this time. The normal balance of the withdrawals account is a debit. So we need to credit withdrawals. Whoops, I forgot to write the C. Lipsky withdrawals. Credit of $200, and we put this into the capital account. So we debit C. Lipsky Capital for $200. We just say to close withdrawals. Okay, so those are the 4 entries, but now we need to complete step 8 because step 8 says prepare or record and post the closing entries. So we've looked at recording them. That's these journal entries. But now we need to post those to our T accounts. So we're going to post to service revenue, income summary, to all our expense accounts, again to income summary, and then close the income summary to capital and post our withdrawals. So basically, we just go through. In closing entry number 1, we closed the service revenue. So we debited that. So we could say closing number 1, and that gets us to a 0 balance. And when we did that, we posted that to the income summary. So that was the other side, number 1 of closing entry number 1. Then we closed all of our expenses. So we credited insurance expense, that got to 0. We credited marketing expense, that got us down to 0. We credited amortization expense, which got that down to 0. We also credited rent expense down here. Closing number 2 got us to 0. So these CL2 I'm just putting, that's just my reference to closing entry number 2. So if I ever wonder why I was doing that credit, that's where it was. And then the summary of those was a debit to the income summary. So that's closing number 2. Closing entry number 3, we closed the income summary. So this left us with a balance of $1,400. And then we close that in entry number 3, which again got us down to a 0 balance in income summary, and we closed it to the capital account. So we had a credit here in closing entry number 3. And entry number 4 was to close the withdrawals account. So we credited withdrawals, closing number 3. Got us to a 0 balance there, and we closed it to the capital account. So that was a debit. And now we can find our total balance or our ending balance in the capital. So we say $2,700 plus $1,400 minus our $200. And that gets us to an ending balance of $3,900 in the capital account. Okay, so we've updated these, we've posted all of our closing entries, and now these are our final balances in the account. So if we look through this, we see that the only accounts that are left with balances are other assets, long-term liabilities, cash, AP and AR, and our capital account. So those are the balance sheet accounts. These are all our permanent accounts. And this is what we want. So we closed all of those temporary accounts, our revenues and expenses and withdrawals, and now we're left just with the permanent balances. Okay. So that looks at step 8. In the next video, we'll go through step 9, which is preparing the post-closing trial balance.